Good morning, this is Connor from 500 Edge, where we trade SPX 0DTE options. If you want to join the team, link in the description. In this video, I'm going to recap the previous session and break down what matters today ahead of the opening bell. On Tuesday, we took a total of 7 trades, 6 winners, 1 loser, for a total absolute return of $8,920 or 5.46% in our 1% risk model portfolio, where we are risking no more than 1% per trade. The biggest winner, 74.15 long call, 165% return. The only losing trade, 74.60 long call for a negative 44% return. This was entered very early in the pre-market and was just a little bit too aggressive, very early entry. In terms of the downside trade, so we only played one. That was a long put at 73.80 for 140% return. Overall, a lot of good opportunities, both on the upside and the downside. On the session, SPX traded lower, closing down 1.44% to 73.65. Tech underperformed, down 4%, semis down 7%. This limited the upside in yesterday's session. Now, of course, we opened with a large gap to the downside, very bearish, but the market does not move in a straight line. 1.7% down. We were looking for an oversold bounce, potential squeeze rally on the upside near the open. And we were actually positioning for this in the pre-market, but we did have a cash market entry just a few minutes into the open, buying off 73.50, 73.45, looking for a squeeze rally into 74.30, 0 gamma. Now, the key for the upside was volatility contraction, and that's exactly what we saw here. Peak in VIX at 20.5. That was the pre-market peak, and a hard crush into our downside pivot of 19. Now, vol did remain bid for most of the session, just trading around that 19 handle, closing up around 10%. So still some fear in the markets, and we are below all the transitional levels. So just context for yesterday's session, we are in negative gamma, below the flip levels, below the 0 gamma level, and the trend is down, the 20 EMA below the 40 EMA and downsloping. That holds true on both the 5-minute and the 15-minute time frame. So this was technically a counter trend reversal trade. Again, market's not going to move in a straight line, so these are really good opportunities. Now, this was technically a short setup. I did not participate in this, but I did buy the dip, higher low, break of trend line, reclaim of 73.79 for the upside target of 7,400. Now, quite early, we had the view that the high and low were set. So I wasn't expecting a move back up to, 74.20, 74.30. So close that into 7,400. And this is actually when we bought those long puts. So this would be a continuation play, 7,400. We're back into those moving averages. And then we're looking for a move down to the next support level. So level to level trading. And that was 73.79. Now, I did enter a little too soon. I mean, the trade worked out, but it took about an hour before we finally got that move. Nonetheless, that was a good winner. For today, early pre-market, the S&P 500 is trading higher, up 0.2%. NASDAQ up 0.6%, and the VIX down 1.3%, continuing to trade around that 19 pivot. The trend remains down, the 20 EMA below the 40 EMA. This is also true on the 15-minute time frame. The 20 EMA in green below the 40 EMA in red. In regards to levels, we have a shift lower in the 0 gamma level to 73.80. So potential transitional level today, above bullish, below bearish. Now, in the event we can break and hold above 73.80, perhaps there is a minor downsloping trend line here connecting the highs from the previous session. Not super significant as it's only connecting 2 points over the course of one session. Nonetheless, potential resistance. But the level to watch on the upside is going to be 7,400. Now, keep in mind the behavior here in yesterday's session. It didn't really act as strong support or resistance. We traded above it. We traded below it. It acted more like a pivot point than anything. But if we can break above 7,400, flows are going to become much more supportive. And we'll illustrate that on the gamma charts in a second. But it opens the door to 74.25, the previous session's high. SPY flip level at 74.30, which is also gap entry. So this is going to be the first major resistance zone on the upside. Now gap fill is 74.73. But there is a pretty big level within this gap, and that is the SPX flip at 74.60. And if you recall, this was a pretty critical session 2 days ago before we had the big breakdown. So that's going to be a big level to watch on the upside, not only from a price action perspective, but it is the dealer transitional level. On the downside, below 73.80 gamma opens the door to the previous low, 73.47, 73.50, that's G2, so it's still a pretty big gamma level. And then a break of that previous low is a continuation signal. And then there is a lot of gamma down here, a lot of negative gamma, 73.25, 73.20, 73.10, and then the 7300 SPX put wall. Transitioning over to our dashboard, total gamma exposure for the SPX is negative 460 million notional, trading below our main transitional level of 74.60. Below, most strikes are negative, that is destabilizing for the market price. Above, most strikes are positive, that is supportive for the market price. Now take note of the 7400 handle. Below, that's where all the negative gamma sits, including 7450, 25, 20, 10, 7300 put wall. So the levels we just highlighted on the chart. But above 7400, the gamma profile begins to flatten out, a return to neutral, with bulls gaining clear control above the 7460 flip level. In regards to implied volatility today, 1.1%. That is an implied high of 74.46 and an implied low of 73.84. So a little bit elevated volatility given the fact we are in negative gamma, but there are no major releases today. But tomorrow is going to be the main event of the week. PCE, the Fed's preferred inflation metric, and that is due out at 8:30. So we could very well see some positioning here today. So once again, keep a close eye on volatility. Keep a close eye on technology, mags, semis, for a directional bias, as the theme over the past couple weeks has been rotation out of that trade.